So, how do you overcome big challenges when you face them in real estate deals? Sometimes the bigger the deal means the bigger the challenge. So, my guest today, Jorge Abreu, has done just some amazing things. He has over 3,400 doors. He has a construction company as well, and he has an e-commerce business. And he faces challenges in all of those things. So, George, welcome. How are you today?
I'm doing good. I'm doing good. Yourself?
Besides being tired with that intro, I'm just even saying that it's a
Yeah, you
lot.
just
But
got
yeah.
me stressed out thinking
I
about it.
know, I know, right. So, but you're one of the most level-headed guys that I know. And how do you face, when you face big challenges? Because I know when it comes to real estate deals, some people think that you get these big deals, you get them closed, and all of a sudden there's no work to be done, and it really nothing can be further from the truth, right? There's so many things that you don't know, even if you've done things correctly in diligence, and you just things come up. So, what are some challenges that you faced kind of in doing different real estate projects? And how have you worked through them?
Yeah, I mean, I've faced several challenges, right? And the growth we've had, especially in the multifamily space. I spent 12 plus years in the single family, maybe small multifamily space, and had conquered many challenges there. And then stepping into multifamily, the first one that comes to mind is raising equity, which I think a lot of
Hmm.
investors face that challenge. I've actually been seeing it a lot lately where they underestimate, what it takes to raise equity, and they end up having to drop deals because they can't raise the equity.
Yeah.
Um, my the first syndication. So my first syndication, I did not raise any equity. I found the deal. Um, I was boots on the ground, asset management, pretty much did everything but raise the equity.
Mm.
Um, and then on the second deal, we had structured it sort of the same way. And the challenge that came was midway through, um, I was forced to raise equity in a sense. So our,
Mm.
our partner that we brought in to raise the equity um, ran into some issues and was spread out a little too thin. So um, I was kind of thrown in. I had been setting up to raise equity. I started building my platform and talking to investors here and there. Um, and the plan was to do it probably in the next deal, but that got thrown at me. So um, I got it done. I did get it done, and we closed that deal. I think when challenges come up, there's essentially two things you can do, right? You can figure out how to tackle it, come up with a plan, and just go head on, or you can get scared in a sense and kind of
Hmm.
just you know have all these beliefs and stop yourself from actually moving forward and getting it done. I've always had the mindset of I don't let things that I can't control stress me out. So, all those things, all that noise is canceled out. But when there's something that I can control, I go all in.
Yeah. There's something you brought up that I think is really important, and it has to do with mindset. If you look at challenges, and what this has to do with real estate, has to do with life, has to do with anything. If you look at challenges as just being like, oh, well, that sucks, or you're kind of a complaining attitude, or just life's just really hard all the time, then life will be really hard all the time. But if you're able to really translate those into growth and opportunity, and realize that like nothing is wasted, right? We can learn from everything, and even from a faith standpoint, I believe that God uses everything, right? Even when things don't go well and things go wrong or something terrible happens, there is some sort of redeeming thing that can be brought out of that. And it's easy to miss it. It's easy to miss the silver lining when we get bitter or we get upset. And I think, and you mentioned a couple examples of raising money. I remember, and I've shared this story a lot, but the idea of going to my first, my first deal and trying to raise money, and we went to 63 different friends and family, and absolutely zero invested, George. But it's you learn, and then
Yep.
after a while, it's still kind of this magical experience when people do decide to invest. But I'm seeing it right now. There's a deal that I'm watching some friends go through, and they're trying to raise a lot of money. They've had very little success. They may end up losing a pretty significant amount of hard money on it just because they're having trouble. And so that's where, obviously too, you want to prepare yourself for that. But let's talk specifically, about maybe some of the, stuff with construction. Or I know the fear is, right. You buy a deal or you get into some deal, whether it's a single family or it's a large multifamily, and all of a sudden, oh my gosh, there's foundation issues, or oh my gosh, there's some, environmental issue, especially like in California where there's all these, multiple stages of environmental studies and stuff. But what are some things that you kind of encountered that were unexpected in some of your properties you've worked on, or maybe one in particular, and kind of what have you done to kind of resolve that?
On that end, we're pretty detailed on the front end. I'm trying to think of, something that's maybe caught us off guard. I think on one of our earlier deals, we knew we were going to have some sewer issues, but we kind of underestimated what we were going to need to take that on. So I think we ended up spending quite a bit of our contingency on the sewer, which I don't usually like to spend my contingency, period, but
Right.
especially not a big chunk of it on something like sewer lines. So since that, like you said, that was a challenge. Well, I think as long as you learn from that challenge, then you're growing. So from that deal on, I mean, we scope every single sewer line. We don't just do like a
Right.
percentage. We know exactly what we're getting into. Only other thing I can think of is, um, I know the first deal we were going to refi cash out of. We're getting everything set up with the bank to do so, and we had a fire in one
Oh
of the
yeah.
buildings, and that was quite a challenge. Like, not necessarily dealing with the insurance loss and the construction, because I'm used to that. That was
Mm.
piece of cake. It was the speed. Like, we're gonna have
Mm.
to fight the insurance for money, and we're also gonna have to do this quickly at the same time so that we can
Mm.
refi. Um, so that was a bit interesting. We ended up having to leave a little bit of money on the table, as far as the negotiations with the insurance, because we had a certain deadline we had to meet for the refi. Um, but yeah,
Yeah,
that's
we've had a couple different fires on different properties. Thankfully, nobody's been hurt, but it sets you back because you got to figure out it's just a lot of extra work and it takes time. And sometimes it can actually work out in some ways okay because then insurance comes in and they pay for the missed time for rents, or they, you figure out different places for the tenants or housing them. But you kind of end up getting, new units or fully remodeled units afterwards. But it is a pain in the butt because it's just a lot of extra work and it's a lot more to do,
yep.
especially like you said, when you've got a deadline and you've got, that's just kind of how life is, right? There's a saying that life is what happens while you're making other plans. And I think it's so true, right? It's just like, you know
Yep.
what, like life just happens. I had a great idea and, it just happened. But um, well, let's take a little step, kind of go up a little higher in the clouds, 30,000 foot view. Why don't you talk to us a little bit about kind of your experience with multifamily and kind of what you love about it and how you got started? Just tell us a little bit of the story of kind of how you got into it.
Yeah, so like I mentioned earlier, I started in the single family space. My goal getting into this was always to scale and to build, something huge and something that I could leave behind. I couldn't quite figure that out on the single family, and I had scaled it, but I kept running into some roadblocks to get it to like the next level. And that's when I was introduced to syndications for multifamily. Before that, I had no idea that you can bring together these investors and take these properties down together. And man, as soon as I found that, like, uh, I was quickly attracted to it, and like, this is where it's at. This is where I need to be. I need to learn this space.
Mhm.
So I spent like the next year just underwriting everything and getting the knowledge, slowly selling off any single family and kind of getting ready for it. And then just made the transition. The end of this year, I would have acquired, just did the numbers. I'm looking at my board. Um,
Nice.
right under 5,900 units.
Wow.
When, yeah, goal was to hit 5,000 this year. So I surpass that and want to keep growing exponentially. Next year I'm looking to
Congrats.
do 10,000 and
Wow, that's amazing. We added about 1,000 doors this year, so we're pretty excited. But 5,000 in 1 year, that's impressive. So my
yep.
numbers here are old. So how many doors are you at now? What's your total count?
So total acquisition count is the right under 5,900.
Okay.
We also had some exits, about 1,400 in exits. So roughly 4,500 units under management now.
Wow, that's impressive. And do you guys property manage yourselves, or do you have a third party?
Third party right now.
Okay.
It's definitely a debate whether we're bringing that in-house next year.
That's always a debate, right? I with my former group I was with, it was like we debated that because you have to get to a certain size where it makes sense, but even you guys really are at that size, but geographically and some things it's harder to set up, I've heard, but then you can implement systems and changes sooner and you have more information more quickly, you have more control over the process, but it's just more to do, right? It's more to set
Yeah, I
up. So
mean
if you have a really
it's
good
a whole
third
other
party,
business.
yeah,
It's
it is. Well, you've only got two, three other businesses, so why don't
I got
you?
room for more.
I know, right? Yeah, we were just talking about this before the interview started. How your whole family, your wife is very much a go-getter as well, and really you've got a family at home. So let's talk on that. How do you balance everything? I mean, how do you balance having young kids and a family and three businesses? That seems like a lot to try to balance.
Yeah, no, the balance has been tough throughout the years, especially before when my wife and I worked hand in hand together, building the business, and it was hard to separate the
Mm,
two, work and outside of work. And we figured it out, and then when we started having the kids, that's when I really started building out the team because I
mm,
realized I can't keep doing this and put as much attention as I would like to my family.
mm,
Um, so that's when I really started focusing on building out my team, and then eventually got my wife out of there, and that made it a lot easier to separate as well. And what I do is I try to spend quality time. So when I'm with
mm.
my children, I'm there. I'm not distracted, and then I think that helps. And I also, if there's anything, I make it a point that if there's something big happening, a sporting event or something in their school, I always make it a point to be there no matter what.
Mm.
And that's how I find my balance. I'm not sure if it's the right balance, but it works. It works for me.
Yeah, absolutely. No, I think it's a really good topic because I think especially, I'm not sure how old you are, George. I'm 41, and I just feel like at this time, you're having kids and just wanting to be there, wanting to be around, and yet also having this incredible vision and drive and just really wanting to, do big things in business and in life. And it can be really challenging to do it all together. And it's, that's the good thing too with kids is we don't get the time back. So we try to make those moments that we have really count. And so it's great you're able to make some time and really be there for your family and your kids. Let's talk a little bit more about building a team around you because obviously you have 5,900 units and talk to us a little bit about some things that you've discovered in building a good team around you.
Yeah, I think it's the part that nobody really speaks about enough when you decide to start a business. Uh, it's not easy. It's not easy to hire employees. It's not easy getting business partners. To me, I think to really grow a large company, you obviously have to be able to master that. And I've had a lot of challenges throughout the years, but I think I've starting to discover the secret sauce there, and it's you've got to one planning accordingly, right? You don't want to put your back against a wall and have to hire somebody just
Hmm.
because you've taken on more than you can handle. I'm not saying you want to have a bunch of employees and not have any work, but you want to time it right. you want to hire slowly, meaning, look, you've got to interview them 3 or 4 times. You've got to get different people on your staff to interview them.
Mhm.
Take your time. If you want to take a month to hire somebody, like take the month. It's
Yeah.
most people don't get married to somebody. I'm not saying you're going to get um, obviously employees can come and go, but ideally, if I bring someone on, my plan is to keep them, right? As long as
Hmm.
I possibly can, and hopefully they'll feel the same way. Um, I think core values and morals, making sure that you align with that individual on that end is super important. It's something
Hmm.
I didn't pay too much attention at first when I was growing the companies, and I should have. There were some
Hmm.
people that I shouldn't have let in, and I did, and then I realized later on, um, yeah, they're really good at sales, but just not a good person. and
Yeah. Well, then character really, that is the defining thing, right? And it's good. I think you mentioned a couple nuggets there of hiring people before you need them or kind of know where you're going and get people on board. And then also having that long-term mindset to really keep them and obviously you want to treat them well and you want to find ways to make it win-win. And I think, you've obviously done that very well. I've got a few staff. I've just got a full-time virtual assistant in the Philippines who helps me with a lot of my content stuff. And then of course, got video and other podcasts and stuff like that. And then I've got my partners I work more as partners with. But for you, you've got a lot of different elements that you're doing because you're doing a lot more. But I wanted to also just unpack a little bit. You've shared this with me in our conversations before. I think I've heard from someone else about you have some really creative things you do to help raise funds, and you've got some like e-commerce stuff that you do with that, right? Aren't you? Don't you have some creative ways that you network and you have things that you do to try to reach out to folks and share about your investments? And are these all accredited only ones you can advertise for a lot of your deals? Or are they ones that you can? Or tell us a little bit about your process there and how you've been able to do that.
yeah, for the most part, most of our stuff is 506Cs, so we're able to market. We are constantly building our email list, right? So that's a given in a sense. But we do a lot to build that list from interviews like this and networking and speaking at events. Um, and then we've done some marketing here and there, some online marketing. Not a whole lot. I think as we continue to grow, that's definitely something that we'll start doing more of. Some retargeting and Facebook or YouTube ads. Um, Mainly right now, it's a lot of social media, it's a lot of networking, it's a lot of going to events, and also referrals from our existing investors. But
Yeah.
yeah, that's where we're getting the bulk of investors.
That's great. Well, I think that's something too. Obviously, we have different people that are watching this. Some are, investing. Some are looking to grow their own business or get involved in syndication. But it really is amazing when someone has had a great experience. They tell somebody about it, or even if you ask them that, what was your experience? Or like, oh, I'm thinking of this other person, and we get a lot of referrals. We're starting to get a lot more referrals now because of our performance and our relationship with people. And it really means a lot when you get a referral. And I would say, even to anybody listening, I try to think of that as well when I have a good experience, either investing, as I invest passively in things outside of multifamily or even outside of our group, and just being able to share that information along when somebody has a great experience, it really obviously means a lot. It really helps a lot of people out, and that's the thing that I find in multifamily syndication specifically is 98% of people that should be doing this are not doing it, right? Because they don't know
Y-
about it.
Yeah, I mean
And
it's a game changer, man. When you take somebody, let's say $50,000, right, and you give them a 3x on their money, I mean that could be a game changer for them, and yeah, they definitely want to start telling everybody, hey, get your money out of your bank, like.
yeah. No, totally. No, it's true. Good performance and good operators. There's a trail that's left, and it's really really an awesome thing. So, what would you say for someone who's maybe never invested in multifamily syndication, or really just never maybe they're doing single family like you and I were in the past? Like, what would you say to them about multifamily? Like, what would you say to someone who's interested maybe in starting but not quite sure what to do?
Yeah, I think are we talking about more on the active side or or
Yeah,
passive?
let's talk a little. Well, we can talk to both. Why don't you first talk about active, somebody who's interested in doing it themselves or being a part of a team, maybe somebody who's passive, maybe you can kind of touch on both.
Yeah, I would from my experience, so I have especially a lot this year. I've had a lot of investors, beginners kind of bring me their deals. I kind of put it out there that, hey, I'll co-GP with you. I'll help you through the deal. Um, and what I find is a lot of them haven't put in the work. They haven't really done their homework. They haven't even I mean, there's so much free content out there right now. I mean, you
Hmm.
can get a pretty good idea of what it takes um, to actually close a deal and manage it correctly. Um, and man, a lot of them just think that especially on the equity side, they definitely think it's just going to come. You know, the the underwriting. I mean, you've got to have some pretty good underwriting, right? I mean, I feel like you should if you're doing this, and if you're gonna have investors trust you with their money, like you should be able to come up with some good projections and really know how to research the data yourself and not kind of just be guided by the brokers and the OM. I see that way too often.
Hmm.
So I would say, one, get educated, I guess is what I'm saying, right? Get educated one way or another, whether you're going to pay someone to mentor you, whether you're going to
Hmm.
soak up all the free content that's out there, or I don't know, do an internship with somebody.
Yeah.
There's a lot of different ways to do it.
You bring up a really good point, and you talk about education, and we say there's really two things. One is education, the other is networking. So who you meet, the people you meet, as well as getting yourself educated. And I think whether you want to be someone who is operating, who's finding the deals and more operating the assets, or you're somebody who really wants to work with people, do more of the money raising, because there's kind of different tracks. There are groups that do everything, but usually people have different roles within that. But especially if you're looking at raising money, it's important that you understand how a deal works. You can explain it. You really, I've underwritten 100 deals, or you've at least done a lot where you can say, hey, these numbers, they look a little bit lofty in these areas, or you can speak intelligently to it. Because when you know what you're talking about, people pick that up. And when you don't know what you're talking about,
Yeah.
even if people don't know it, like they can tell. So it's
Well,
really
in the same
important to
token, I
educate
mean,
yourself.
you're going to be putting your investors in that deal too, so you want to
Yeah.
know enough to where you're reviewing the deal sponsors documents that you could tell if it's a deal or not, or you can spot some red flags.
Hmm.
So yeah, I think
100%.
I agree. It's very important.
Yeah, so talk to us about passive. Somebody hasn't pulled the trigger on a passive deal. Like, yeah, I know I should get in real estate, but I don't want to, or maybe I have a rental, but I don't kind of like it, or I sold it, or whatever. But why should someone consider maybe a busy professional getting involved in multifamily as a passive investor?
I mean, to me, the number one, well, there's a couple different reasons, I guess. I was gonna say the number one, but then I thought of two quickly. Um, one, it's truly passive, right? Once you're done vetting the deal sponsor and um, looking into the deal, and you send over your money, I mean, that's it. The rest is passive, right? You should at that point just begin to get updates, financials, and hopefully distributions, right?
Hmm.
Um, so truly passive. And then I know one that's big for me is the tax, the benefits, the tax benefits of investing in multifamily and the depreciation you can receive. Um, I realize some individuals can claim more than that than others and whatnot, but um, I know that's been huge for me personally. So I think
Yeah.
those two things, if you're just investing in stocks or you just got your 401k, I think you're doing yourself an injustice. You're doing yourself, your family. Like there's other alternative investments that can, if you do it smart and you do your homework and you vet whoever the deal sponsor is, I mean, you can make much better returns.
Yeah, I think that's it. You talked a lot about education, and I've had over 1,200 one-on-one phone calls with high net worth investors, and I've just always been amazed how a lot of people are very, if people are educating themselves, it allows them to make better decisions. It sounds really simple, but it's something that not everybody does, and we don't, and I don't always do it. But I think just in general, the more we can learn about different types of investments, I mean, even beyond real estate, but real estate though it's truly is, and I don't know if I'm sure you'd agree with this because you're in real estate too, but it is an unfair asset class. It's an asset class that like you basically pay little or no taxes. You can get really great returns. You don't have the volatility of the stock market, particularly in multifamily and other things. And it's awesome. So on that note, and just kind of as we're wrapping up here, George, let's talk about kind of what's next. What do you see is going to happen next in the multifamily market? Do you have any predictions as far as, obviously we have this money printing, we've got, talking about raising rates, like what do you kind of see happening in the next, 6 to 12 months here?
6 to 12 months. A lot has happened, right, in the last year, 2 years.
Yeah.
I think multifamily has definitely stood out from all other, maybe a couple more real estate asset classes that have also performed really well. But I think that's going to continue to attract a lot of money towards it, like it is now. Inflation is real, right? And it's happening. So leaving money, when people start realizing that if you're just leaving money in your account, you're actually losing money because of the rate of inflation.
Yeah.
So it makes 100% sense to put that into a real asset like multifamily. And at that point, you've got other drivers to raise that value, and you don't just have it sitting outside losing money. So I think it's going to continue to be hot, for the 6 to 12 month outlook. I think interest rates is going to really maybe sway the market one way or the other, or maybe that's going to start to soften the market.
Sure.
If the rates do go up. I don't see the cap rates going much higher, and I know they're getting compressed and compressed. Maybe the compression will slow down or stop, but I don't see them shooting back up to 6%, 7%. I don't see anything like that anytime soon.
Yeah, I think I agree. I think that if rates do rise, which they probably will, it'll be gradual over time. And even then, I kind of look at it and think that, when you have rates go up, it basically the asset costs more to own, which is really translated to an increased cost of ownership, which really goes, will be, I think, passed down to tenants as far as rents, as well as inflation driving rents to go higher as well. So it'd be interesting to see. I don't know necessarily that prices they could soften a little bit, but it just will be interesting to see, even if cap rates rise a little bit, it doesn't mean that necessarily that values will go down, because it could actually mean that the rents people are paying are continuing to go up. So it's interesting concept. We just did an event on this recently, which was really great, with you and a couple other guys talking about kind of what was happening or what's coming up in the future. So I appreciate you sharing that for this audience as well. Well, George, I just wanted to say, really appreciate you. You add so much to the conversation, as far as because of your construction background, the different things that you've done, and just the ability you've been able to scale is really impressive. And the way that you can describe about how you treat investors and how you look at deals. So I just wanted to say, really appreciate you. Want to honor you for that. So thank you for what you brought here today and what you bring to the entire multifamily and investor community. So appreciate you having you on today. What's a good way for people to get in touch with you?
Best way is probably visit my website. So elevatecig.com stands for Commercial Investment Group. So elevatecig.com. They can also shoot me an email, which is Jorge, Jorge, at elevatecig.com. And yes, I go by George, but I also get called Jorge, and it's spelled Jorge. So
I was going to start calling you Jorge, because I've been calling you George for so long, and I think I asked you
yeah,
that in the
no, I
beginning.
definitely go by George.
Yeah.
If somebody asks me my name, but yeah, if they shoot me an email and they say they heard me here on your podcast, I can send them some free content.
All right, that's awesome. Well, George, thanks again for coming today. We'll have to have you back in the future. Really appreciate you adding value today.
Thank you.
All right, so as you can tell, George is super experienced, has a really large portfolio. He's been doing this for a while, lots of synergies there. He didn't really kind of share it, but he has a lot of things that are behind the scenes that just, industry knowledge, trade knowledge that he's learned along the way. And when you talk to someone, it's really important that you get a gauge for, how is this person, where are they coming from? And what is their experience? And do they have the skills and the competence to be able to do it? Now, if you're on the active side, sometimes you don't have those skills and those, things because you've never done it, right? Or maybe you haven't done as much of it. But the cool thing about multifamily is if you have partners that have, more experience than you in certain areas, or you bring different types of experience, it allows you to really have those synergies. So for me, I've been doing real estate for years, for over 15 years, but it's just about 4 years in multifamily. And how I've really built my experience or my team is finding people that are very experienced. So one of my partners that I've done quite a bit of work with has 10,000 units, or has had over 10,000 units at one point, been doing it over 20 years, and really is good on the asset management side. So that gives me a lot of comfort, both investing my own funds, as well as bringing other investors' funds into it as well. So it is really important that you educate yourself, that you learn things like this. If you haven't downloaded our free report on investing during and after a pandemic, you can go to bronsonequity.com, check that out. And we also have our deals that we're doing regularly. So if you're not on our investor list, please go to bronsonequity.com and click the join button, and we'll set up a relationship with you, start letting you know about our deals that are forthcoming. So anyway, thanks for taking the time, and we'll look forward to seeing you or hearing you on the next episode.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.